Disney has dropped 8% down after earnings today. May 11, it is now 1:21 p.m. And in this video, we're going to explain why we think Disney is not going to drop even more based on the unusual options activity. And then second, we're going to go over how we are trading Disney based on these unusual options. So without further ado, let's get right to it. These unusual options happened at 10:11 a.m. at the 15-second mark. You'll see here 1,500 of them. And these were done for the October 20th and the January 2023 24s here. Okay, keep in mind that's farther away. And so when we look at these options, we can start looking at the most further dated away. You'll see here this 100 strike here where they had sold it. You'll see here that the volume is actually less than the open interest. So it's possible that they had closed this trade. Okay. And so we're going to analyze the situation assuming that they had closed it and opened it. Okay. And so if they had opened it, let's put that into our analysis. And if they had closed it, we won't even include it in our analysis. And we would put the other leg of the options into our trade. It was the October's over here at the 95 strike. You see one of our positions is on there already. And so they had bought the 95 strikes. And so this is assuming that both options were opened. And so when we look at this trade, you'll see that it's actually bullish. The price currently at 92. If it goes up in price on the x-axis, it will be increasing in profits. The purple line is above the zero line on the profit loss on the y-axis. It's above it. So that's profit. That's loss if it goes down. And so you'll see this bullishness on Disney, assuming that they were both opening orders. And if we were to assume that that was a closing order and this was the only opening order, because we see here that there was a lot more volume than the open interest. Definitely the 1,500 was more than the 611. So this was an opening order where they had bought these calls. You'll see that this on its own is also a bullish trade. So if that 100 strike call was closing and we don't take that into account and we just take the 95, this is also bullish. And so that leads us to put on a bullish trade for Disney at this time. So the way we constructed our trade was a little different. You'll see here that these trades that these unusual options have a negative 2 theta. This one has negative 2 theta. And so we wanted to have a slightly different trade. This trade, if they were both opening orders, is also slightly negative. This one's negative 0.54. And so what we did instead of these unusual options was that we bought the 95 strikes, and then we went to a closer dated for the May 19s here, and we sold the 95 strikes. You'll see here, this is our position. There's actually a lot of volume on this, more than the open interest. So when we sold this, we actually created a spread. It's called a calendar spread strategy. And you'll see here, this is our trade here. So it is bullish. It does expire on May 19. And so it will be profitable, because if it goes up, because you'll see here, this is the zero line up here. And so the reason why we picked this trade, or multiple reasons, there's one of the reasons is that you'll see here a positive theta here, right? And the other reason is the volatility is positive, a high vega, because Disney is trading currently at, look at the option statistics here, the IV percentile is only 4%, so it's pretty low IV percentile. So we expect there could be more upside in volatility, an increase in vega, and so we want a positive vega to take advantage of that, and that's why a calendar spread takes advantage of that. If things do change at expiration, when 8 days goes by, we could roll our trade to the next expiration or the next cycles, and we can keep rolling our trades to each expiration to continue to collect credit for it, to eventually offset the cost of our initial call here. And so that's kind of our initial plan at this moment. We'll have to see and monitor the unusual options activities on Disney to get a sense of where the large institutional traders are being traded at what price levels. For example, this 1500, if you take that into account, this was done for $750, right? So this trade on itself was 1500 times $750. So somebody had to have at least $1.125 million to put on this trade, because those call options cost that much. So that's something to take into account. And so we also think Disney is going to not drop anymore, because we have this technical support level right here. You see, if we move back in time here, you'll see here, this price here consolidated. This is a support level right here. Back in March, this was held as support right around this level. Obviously, it did drop over here down even a little lower to about $90. And then from then on, it started to come back up. And so that's the technical reason why also gives us more bullishness towards Disney. And so that's why we think Disney should be coming up and try to fill this gap as at some point. But we do have until October, because the call option expires in October. So we do have quite a bit of time to see and be able to roll our other option that we sold to take advantage of this big drop in Disney. Okay, so hope this was helpful. Please smash that like button, subscribe if you haven't, and comment below on what you think is going to happen to Disney. We're very curious to know what everyone thinks. Is Disney going to keep dropping, or will it come back up? Please let us know in the comments below. Your participation also motivates us to continue making more videos and to share the knowledge and insight. And I'd really appreciate if you shared your comments and your thoughts on Disney as well. Okay? Thank you very much, and take care, everybody. Good luck.